Yo, yo, yo. What's up, man? Look at how many people are coming in here. What's up, dude? Mason, Tevi, Warrior Gaming. What's up, Matty Matt? Joe. Plastic Starfish. Moon Ape. Matt. Ariel. What's up, guys? Yeah, it's been a little while. Been moving homes. So we've been doing this for about 2 months now. And finally got our place. And yeah, we can look at the charts now, man. I mean, I've been looking at the charts, just not the same way. Haven't had the chance to, but on the bright side, we have been on the rest part of the point of interest that we talk about, which there's not much going on when there's no volatility. So thankfully, that was the case. That was the transition period. We had that, but here is the cycle point of interest. I'm going to be going over that today, and I'm going to talk about the spots indicator as well because a couple of things are showing up here. Okay. All right, we'll go over that a little later. You just saw. All right, so we are right in the middle, going to the middle of the point of interest here. It's a 13-day window where we tend to experience volatility. Volatility is not a for sure thing, but this is where we normally experience the volatility. There's right now the correlation is 5 for 5. So all of these POIs we've had in the past have all landed inside this 2-month cycle 13-day window that we have tracking here. So if we're going to experience any volatility, it's likely that it'll be inside this window. Okay, so we're coming into it. I'll show you guys the last two we had that were positive. Okay, so we have March, and then we have August. And right now, the one that I think is more likely to play out is the one similar to August. You can see this one starts to kick in right around the middle. And right now, there's two things that happen. So we have a blue spot on the 4-hour chart. The 4-hour interval is going to be the most accurate indicator that suggests upside on AMC. So I'm going to show you guys here what this means. Let's go ahead and open up these real quick. Make them a little bigger. Okay. So every blue spot we have on this indicator, this spots indicator, is an indicator I made. It uses a super smoother filter and an EMA cross with cycle parameter. So every time you have a cross here, okay, there is correlation. The price goes up. Every time you have a pink circle, correlation that the price comes down. And it's pretty strong correlation here. So you can see from the first spot we have in January, so this is from the beginning of the year, we have a 64% rally. Okay, it comes back down, crosses blue again, comes up 32%, comes back down. The next blue spot comes up 62%. Okay, and the next one 22, the next one 22, the next one 20. So right now we have a blue spot. Okay, so correlation here is perfect so far this year. If we have a rally here coming into the point of interest, then it makes it more likely that this blue spot is also going to give us at least a 20% rally based on this correlation. Doesn't have to happen. If it gets rejected right away, I've said this before, but anytime you have more than three spots in a row in a small window, I normally don't put too much faith in when there's a lot of saturation on these spots. So if we do have, like, if it cancels out, if it's blue and then pink and then blue again, it's better to just let it ride and see what and go from there, right? But so far, with GME earnings, AMC held itself pretty well. I think that's something else actually that I'm going to talk about here. Okay, I'm going to take some of these other ones out of here. Okay, so this is a little stock comparison tool I use. Okay, and it's going to give you, it works similar to an RSI. It's not the same, but it measures, measures multiple stocks here, and kind of it also tells you the correlation between both of them. So, you can look at this on any time frame. I'm going to go on the daily chart for this example here. But for the longest time, we had 1-to-1 correlation with GME, right? So right here on this, you can see that, it dates way back to August, really right after that June run-up. It's like cycles started to track 1-to-1 right here. Okay, everything's pretty similar. Okay, and then right up until this point here, the two start to trade against each other. So the reason why we didn't see AMC dump yesterday like GME, even though GME had earnings, right? Because they're not necessarily tracking the same way anymore. I think there is a slight difference in the way they're tracking. So I think that this might be good for AMC, and I'll show you guys why. Pulled this up yesterday on the Discord, and we talked about the run-up that GME had early this year. Okay, GME is right here. Okay, and prior to this run-up, AMC had a pretty massive dump here. So it took a little bit of time. It just kind of consolidated, did not respect support. It crossed very quickly. It fell, and then a few days later, GME started to pump very quickly. So, if these two are trading slightly against each other, we can see some gaps here below. That's something else we can use for this is, these hedge funds are going to trade once these cycles start to stray away from each other. And we saw this with, Ethereum Classic as well. Like, there was a slight shift in the cycle in the way that they used liquidity for AMC. And these cycles are going to consistently change. They're not going to be the same forever. Okay, they're going to start using new stocks and new meme stocks, new cryptos to leverage any positions in the market. And we can look at this the same way because a lot of people are going to think that these move parallel to each other, which is not the case. Okay, sometimes you do have these slight shifts, and I mean, just looking at these charts, guys, they kind of look inverse. I mean, look at AMC right here. Look at GME. They're basically inverse to each other. Okay. So all I'm saying is pay attention to this because this might be a good thing for AMC, considering that, here in this channel, we track AMC volatility windows, not GME volatility windows. Now, these little windows that we track do happen in the entire market, and there is a correlation with the overall market. So the indices SPY, they tend to rally first, and then once they peak, that is where you see AMC climbing back up. Okay. Okay, so here is SPY above AMC. Try and get them out of here. Okay. Here are the points of interest. We're going to look at the last two positive points of interest here, because this is what we want to see. Like, if we want to see bullish price action here, we're going to be looking at those. We're not going to be looking at anything between. Okay, so both of these, prior to the run-ups, we had a market pump, and the market always went first. Okay, so here, AMC is in an uptrend, right? The market is pumping very quickly, very fast. So the beta here is not the same. Okay, same thing over here. Markets start pumping first, then they peak, everything starts to fall. Okay, AMC starts to go right in between, and you can see it right in between the volatility zone right here. So right now with SPY, the market, we're tracking upside. So I'm tracking upside, and one of the things I had talked about this point of interest in particular is that there's been many fake outs. So there hasn't been a clear direction established yet by the market. I think once we cross the macro resistance at 431, I think from there, if it holds, the market will have a breather, but I think that'll be the first confirmation that the markets are starting to turn around, and they're looking pretty good. Okay, so now we got to look at this right here. We got to look at this little space, because we have the markets trending up. Okay, they broke out just here recently, and this looks to me like an Elliott wave setup. You know, like a micro Elliott wave setup. Impulse wave. I think something like this is going to happen with the market. Okay, we might be where I think we're still at 3 actually. We'll be here at 3, and then 5 will come right around the 21st. That is where the peak ends on the cycle. So if there's going to be any volatility here, AMC is going to have to do it in the next 2 weeks. I still think it's too early for it to play out here, today or tomorrow. I think this week it might be more of a flat week for AMC, and then going into next week, if the markets hold, if they continue to climb, that is where I see AMC doing her thing. Okay, so markets have to hold; they have to keep climbing back up. If we don't see a move before the reverse split, yeah, no, I'm with you in that, and we talked about the correlation before with other stocks that have had reverse splits. They tend to rally first. I agree with that. I think that before we have a reverse split, AMC is going to rally, because it wouldn't make sense. Well, it makes sense for stocks that go to pennies to have reverse splits. For AMC, in my opinion, I think it's a psychological game that they're playing with the whole reverse split thing, because rarely do you see stocks reverse split at where AMC is trading at right now. At the $4 range, it doesn't make sense to me. If it was in the pennies, or 5 cents, 10 cents, whatever, then yes, you have Xella, you have Mullen, these guys, it makes sense for them to do a reverse split, because they're penny stocks. You want to have those be trading back in the dollar range. I think for AMC, that's why I think we are going to experience some kind of a rally. Otherwise, I would see it come into that dollar range, and then that's where things would be pretty, it'd be pretty bad for the stock, in my opinion, because I've seen this happen over and over again with many stocks. But the reason for staying bullish on AMC in particular is because it is holding the current levels right now very well, and you can't ignore that. I mean, look at this. AMC is holding support here very well, and this is just very basic TA here. Hasn't crossed below. This is just higher lows. Okay. So as long as we sustain this was a fake out right here. As long as we hold this right here, I mean, AMC should be primed to go up next. Otherwise, I'm going to say this, but the only other way AMC could potentially climb here after, if, say, this is like an inverse POI and then things start climbing back down, the only other way I could see things turning around is if we have a V reversal, and that would be a macro double bottom. So it would look like this. That would be the only other bullish scenario. Okay, so that's that. I want to pull up some of these. Let's see these other things here. Okay, so we are in a, you can call it like a little triple bottom, almost almost looks like a wedge in a way, but it's not. Like right here, kind of looks like a little wedge. I mean, yeah, it could be a wedge. Yeah, it is a little wedge. I mean, it's holding, man. It's holding. It's not. I told, and I made this very clear, if we have any signs of a rejection here and we start heading back down, I mean, you do have to look at the entire chart, and you have to look at other stocks in the market that have been beat down the way they have. Like there's they don't have the same movement. I don't think so. I think it's different, and that's why it's a lot harder for these guys to push AMC down to those levels. But we saw this happen, and I can pull up many charts here for you. We have BBIG. Okay, we have Mullen. Okay, and we have, what's another one? Let's pull these up on the, okay, and remember, this is not the original price levels for these. Okay, these had reverse splits. Okay, right here, 1 to 20. So that means that at this point, it was trading right around that 30-cent range, and then they did that reverse split. So that's why it's currently at $2, and it keeps going down, right? That's not a good thing. Same with Mullen. Like Mullen had a reverse split, and now it's again in the penny range. So it makes it really hard for these. I mean, it gives the shorts more of an incentive to come back in and short because these guys are doing that. So that's why I prefer not to have them do that. Like even if it came down to that, it just wouldn't be good. I don't think it would be a good thing. But this is why I think it's a psychological game here. If AMC starts to rally, just think about it this way. It happened with support.com. These are the other examples that I gave, but this happened the same way with support.com and Metamaterials. And both of these companies had they had a squeeze happen prior to their reverse splits. And it's the same thing, right? It pumped, it dumped like crazy, and then they had the reverse split. So for AMC, say it pumps Say it goes like this. It goes to like 7 first. Okay, for a POI to be active, it has to be anywhere between that 70 and 100% range. So it really anywhere in here, say it goes to 8 or 9 on this first move here. If it goes there and then it keeps climbing up, say it comes, on the next point of interest in August, goes all the way up here, say it goes to like 15, 20, whatever. If they have a reverse split up here, it would just be so random and goofy. But if they did it, then multiply that, okay, times 10, and then that's where the price is going to go, right? So this would be, say it ends at 20, it would go to 200. You'd still have the same amount of your capital wouldn't change. They would just convert the shares. You would have more, or you would have less shares now. So it would lower the float, and that's it, man. And then at that point, wherever if the price goes up 10x, people are gonna, not everybody knows how reverse splits work. So again, from a psychological perspective, it gives these guys a chance to jump back in on the stock. So say this thing goes to 200, right, from the reverse split, well, they can just start shorting it from there at that point, and then, the rest is it's just a cycle, right? This is a cycle happening here. Cycle kind of resetting and coming back into play. But that's the opportunity I see, and that is what we're currently looking at, right? And that's what I'm hoping happens. I did say this, but if we're gonna have a positive volatility zone here, the correlation I was tracking before was this. Here, this is the little cheat code. Let's see. Here it is. So we got 2 positive, 4 inverse. So 1, 0, 1, and then 4 zeros. Again, same thing right here. Okay. Oh, right here. 1, 0, 1, 4 zeros. Okay, 1, 0, 1, 4 zeros. Rally. Okay, and then here is the only time, because everything started back here during the COVID correction. Okay, that's where everything was shorted to the ground. Things traded sideways for a little bit. Then the shorts started to release everything. 1, 2, 3, boom. Because things are starting to look a lot different than what we're used to, right? I just talked about GME and how AMC is basically tracking inverse to GameStop right now. That's always a signal to the cycles sort of separating a little bit. And normally, when cycles kind of separate, it almost means there's a new cycle happening, like a reset. And if that's the case, well, then I would be tracking. If we come back to square one and it's okay, the sequence has played out all the way through, well, then you come back to the beginning. And that's sort of how this works, how things function here. Pattern development, all this stuff, and pattern structure, what other cycles are doing. I had previously talked about the crypto market, where the crypto market was at and what it was doing. One of the plays that we had right now, and actually I'm waiting for this one to just fully play through, but I'll show you guys here. So CFX, okay, this one here, same thing. It was using the cycle, the AMC cycle. And just looking at the crypto market, looking at the different pattern matches that we found with this one, the target was 22, and we're currently trading at that level, but the absolute bottom level that I'm tracking for this is going to be right around that 12 or even 9, but I'm probably going to close that position here very soon because it's already at that level. So, this was one that we tracked. I'll show you guys a little macro projection. Here's a macro projection. Okay, this was the first target right here. So it followed through all the way, and then right here we had a little fake out. You can see that things kind of started to play out a bit inverse. Okay, but overall, levels were met. Same thing with Bitcoin. These are some patterns that I've been tracking on the pattern scanner. Okay. All right, let's see what we got going on here in this yeah, so and guys, this tends to happen with every stock in the market. That's one of the things I learned with AMC is, this whole thing that went down in 2021, nobody knew what the hell was going on, and like nobody expected something like this to happen. Like, Roaring Kitty, right? The guy who basically covered GameStop and said it was going to squeeze, and like he's doing all this research and stuff. Like that started this whole movement here, but nobody knew the potential that the market was going to the extent that the market experienced this like squeeze, because everything started to run here. It wasn't just GameStop. So this is a pretty big dent here in what the markets have experienced ever. And it's something that everybody, kind of learned the hard way a bit because, everything pumped and then everything dumped. But one thing that I've learned from this is looking at the crypto markets, one thing, that's very important. But everything that comes up, okay, with the momentum it has, so AMC in particular, if it comes up and then it comes down to support or close to support, okay, it does make it more likely that it will reverse back up at some point. Like that's just how stocks work. I mean, what comes down must come back up unless the stock is just crap and goes bankrupt, right? Like, I mean, there's two ways it can happen. But but besides the fundamental part, if things are holding, if they're steady, if things are good and climbing back up, then this should reverse back up. So here, like, let's look at some examples here. We can go to Litecoin. Okay, and this is the entire Litecoin chart. Its period, what it's experienced before. And you know what? No, let's not do Litecoin. Let's do Ethereum. Okay, if it could show me Ethereum's entire chart, that would be cool. Okay. So what happened here with Ethereum? This is one that we track a lot. There's a correlation between Ethereum Classic and AMC and Ethereum, right? Here, okay, Ethereum, and you can look at this the same way, guys. The crypto movement is very similar to the meme movement, like in that cryptocurrencies, like there's still a lot of regulation that needs to be done, so it's not going to work the same as the stock market. And there's a lot of the same communities are involved in the crypto market as they are with the meme stocks, AMC, GME. So look at this the same way and in a similar way, right? So this thing goes up 500%, okay, in 2017. So 2017, boom, 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 rally. Okay, what happens in this period, and this is part of the market cycle, is the cycle of emotions is what they call it. Pull up this chart for you. And no, I'm not going to like overlay this or anything. Like, I mean, I'll overlay it for you just so you could see it, but it's not 1-to-1 or anything. Like, it's not supposed to be like 1-to-1. I just want to show you guys the psychology behind this, because a lot of people just, experience all these. Like, I mean, I think we all experience these, and it's pretty normal. But time is like crucial. The crucial sort of key to this whole thing. But just look at this, right? This traded for 800 days. 800, guys. 800 days. This thing was on a downtrend. It hit a bottom here in March for 800 days. Okay, and it fell. Okay, it fell almost 100%. So anybody who invested up here and held all the way through, they basically lost like 95% of their investment. And if you sold here, well, like, I mean, look at this, bro, after that. Like, you know what I mean? And this was almost 3 years of just downside. Okay, so I'm not saying that, AMC is going to do the same thing or anything like that, but I'm showing you guys that this does happen in the markets where things pump and then they dump forever. The period in which markets go up is always going to be quicker than the downtrend, because that's the way the system works. Anything that pumps, they're going to pump it because they know that the majority, retail, they're going to buy the stock. They're not going to short the stock because they don't have access to short the same way that they have access to buy it. So you have to think about the timelines here. Is typically the downside of markets, especially with ones that have volatility. I'm not talking about, Apple or indices or stuff. Those trend up slowly forever, but there's no volatility in those, so it doesn't matter. I'm talking about just volatility, any crypto or stock with major volatility. This is the way it works. Short periods where the markets pump, massive periods where the markets just trade sideways. And it makes you kind of second guess yourself over and over and over again, because you're like, when is it going to come back up? How fast is it going to come back up? And it's the same thing with AMC. AMC, we have the same thing going on. Okay, let's overlay. Let's see if we can see AMC here. Yeah, we can. But it's a little different because crypto is 24/7. So let's see. Let's take this away. I don't need that. Okay, 800 days of just trading sideways. Look at this. Hasn't been 800 days yet. I don't want to compare it the same way using the dates here, because crypto trades a lot slower than the markets. Like, it'll take forever for crypto to pump. The markets are going to pump a lot quicker because we're limited to, the trading days that we have. you know, timeline wise, it might be the same, considering like if crypto is going to trade sideways on these gap periods, like maybe after hours or the weekends or whatever. You can kind of correlate them in a similar way, but it's the same thing, guys. I mean, look. Previously, we had similar tracking here, and I actually pulled up and showed you guys the how similar these two looked, and it was stretched out. It was stretched out because the POIs, the points of interest, were lining up like 1-to-1. It was like pretty perfect, and I believe it was like right here that we had it tracking. And you can see that, so we had the run up, second, and then we had both of these track, and then right here, we had the POI hit, but it did not continue to go back up. Things started to trend back down and trade sideways again. Okay, so you can kind of see what I'm talking about here, though. I mean, this would just be insane, right? If AMC did something like this. But it's just to show you, you know, that things like this have happened in the past before. And you know, Ethereum went up 500%, came back down, and then rallied again like 4,000%, right? I think with AMC, we might see a different case. A different case. I've already talked about this before, but I think that with the current event, like this is a play opportunity. This is not like a long-term opportunity or anything like that. I don't see it like that. I don't see this as like a long-term hold or anything. This to me is an opportunity based on the cycle, and once it hits the target that I'm tracking, if it does hit that target, that's pretty much it, unless there's some kind of trigger that causes things to go higher and higher and higher and higher. But based on just technicals, levels, fibs, stuff like that, one of the things that I've covered before on where I think the price is going to go. We're going to use the weekly chart for this. Actually, now we're going to use the monthly. I would think this is more of a realistic look here, but you know, it comes all the way back down. If it climbs and does her thing, I think the first target I'd be tracking would be anywhere between that, you know, 15 range. So on this POI and the one coming up, like I said, anywhere between 7 and 9 would be considered a reasonable run. It'd be the first step, and it's about 100%. The second one, I would see anywhere between, if it continues, I would see anywhere between 15 and 30. Like, I know that's pretty steep and that's not conservative at all, but if it's going to squeeze and it's going to do the thing, that would be the next step. And what do you have here? Okay. You got to think about what the pattern would develop into if things panned out the way they look. Okay, you could have AMC form this massive, just like massive, sort of a wedge or a pennant, or like a massive pennant pattern. And then at that point, these guys are just dragging this thing forever, but, you know, it's easy steps, right? It could drag out for a long time, but that would be the only other way I could see things sort of panning out here. There was, I'm trying to see what. Oh, yeah, I was gonna look at the yearly chart too, because something about the yearly one, dude. So you look at the yearly chart with AMC, and remember how I talked about that, you know, indices and blue chip stocks go first? Well, look at AMC, the yearly chart. So it's green, red cancels out, and then we have a little bit of green happening right now. We haven't really done anything this year. So now you go to NVIDIA. Okay, and this is a blue chip stock. Okay, and you have blue, red, and then massive blue. And remember, I say this every single time, but on these POIs, these are always going to go first. You don't see them go after or anything. They always go first, and then once they're primed to come down, you start to see all the small and the mid caps go. So something else I'm tracking for that, man, and you know, AMC, man. See how GME is looking. GME. Look at that. Even GME. It's got this like snake little pattern right here, dude. Hey, dude, GME looks nice. I like the yearly setup on GME. Look at this massive wick too. You know, these wicks are weird because every time there's like a massive hanging wick, I feel like the price for a lot of these crypto plays too, the price tends to gravitate back up there at some point. And this is a bad wick, like a major wick. So it makes you think too. Makes you think. I mean, AMC has it as well. 43. What do I think about the N pattern on the 12-month for AMC? The N pattern. Oh, you're talking about this right here. Yeah, the little N pattern. I mean, like I said, man, I'm pretty optimistic about the macro setups too. And you know, another thing, man. So spots indicator, you guys know how it works, but the weekly chart is extremely powerful for any stock in the market. I use this for everything, and it helps you spot the correlation that you're experiencing. So here, I think we are trading somewhere in this range, but I think that the algorithm here it's sort of playing out like a fractal version of what's happening back here, because we have similar qualities here. So we add that initial fake out. We have a blue cross up, and then crosses back down, rides the trend line here, and then starts to blow up. Okay, same thing here. We have the fake out, and then here, look at how it's respecting the pink curve. Okay, spots indicator, the pink curve is just, it hasn't crossed it. So just imagine what's going to happen here. Just the same way, right? Smaller time frame. You can see this thing happen a lot quicker. But I mean, they look very similar, and this is why I call it a fractal, is because it is extended. It is a lot bigger, right? Cool thing about this is that, remember that $30 level I talked about? Okay, this is the weekly chart, so you can see that this does not happen, or would not happen, if anything, until the August point of interest. It's showing us here. So steady on the way up, starts to curve back up, and you can see that happening right around then. But that's the beauty of these patterns, guys, and pulling up these fractals are going to give you those natural fibs. Call them fibs because, like, I mean, everybody looks at fibs and ratio levels, whatever. Just levels in general. Yeah, this is cool stuff. Also, we have the fast Fourier transform. This right here is the way I found the cycle in the first place. It's the tool I used to help me spot what the cycle was, the 2-month cycle, where it started and everything. I was using the fast Fourier transform. So this one, I use the same way. I play around with the parameters a little bit, and the more you play around with it, the more you're going to find with it. But here's the fast Fourier transform. I have a simplified version here that I made using, again, the cycle parameters. But the cool thing about this is it'll smooth out the entire chart so that it just minimizes these error points in the cycle. So you're trying to get it as smooth as possible. But in this case for AMC, you do want to see. It's almost like you want to see the opposite. You want to see where the error is to pinpoint the mistakes, right? Because the volatility should not be happening on the charts. Okay, with a healthy chart, you don't want to see volatility, right? That's what they say, but that's where the opportunity lies, in my opinion. But you don't want to be seeing that, so you're trying to get the smoothest chart possible. But I use the fast Fourier transform for the complete opposite, which is helping me spot them, so I can track exactly where they are and how far apart they are from each other, smooth them out a little bit. But I always play around with these on the daily chart. I believe this one I had the cycle parameters set 371. No, 371 was the length. There we go. Okay. So, and something else this is going to show you. So it takes the length, okay, that you input into it, and the length here is using it in bars, not in days. Is a lot different than actual bars because this is going to skip weekends and stuff. So that's why you're going to get different results if you apply this on with crypto, because crypto has more bars. Same days, just more bars. Okay? So why this is relevant here. Okay? This right here goes back to back. And this, I haven't talked about this, but this one is like crazy. Okay. Well, I'm telling you guys that this right here helps you like spot these cycles. Look at the parallel channel. Here it is. Okay, so the parallel channel is very simple to understand. It's split into 4-month cycles, so it's 2 cycles back to back. We talked about that inside the parallel channel, which is blue. Okay, we spend 120 days every year. Okay, and this is the first time that we have not gravitated back into the channel. So that did not happen in this cycle. Now we have 240 days. 240 days outside of both the parallel channel and what we call the support channel. So support, parallel, and then volatility. Volatility, you come in and you come back out very quickly. 240 days in here. Where else did we spend 240 days in this cycle, in this parallel channel? Right here. Okay. Now, what is the fast Fourier transform doing down here? Fast Fourier transform is showing us where we're likely to see, and you're going to see some of these in fractal form too, but it's going to, based on the length that you're tracking, it's going to tell you like where similarities lie inside. Like you're going to be able to see it once you overlay the pattern and see like, okay, like are there similarities between these two showing up here? Like is the cycle valid here? And what I found specifically in this range, because we were trading for 240 days outside, is that there also is a correlation that in here that we're trading the same way. Now this one, see where. I don't know where this one right here. It's right here where it's tracking. where did I find the thing? Give me 1 second because I have it pulled up here for sure. I'm trying to see where it is. All right. Let me see if the time frame is correct here, because I feel like I had the wrong interval for this thing. Regardless of the interval, remember that the fast Fourier transform, what it's doing based on the input that you put in, it scans that set, the length. It's going to scan the length, and then that is basically being repeated over and over and over again until you find once it's smoothed out, you're going to see these points here are going to line up very nicely with all of the POIs that we have. So another tool I use is called Change, and I made a video about this as well. Fast Fourier transform shows it a little bit differently. And in this case, where's the fast Fourier? Okay, here it is. Again, on the daily chart. Okay, that's why. On the daily chart, that is not the input, because look at that. Right here, coming it down, this is actually supposed to be over here. Okay, so that's me. I put the wrong input in. Okay, regardless, with the right input, this is right here. Okay, and what this is showing, though, is with that period, so that we pulled up the parallel channel. Okay, is it 120 days outside, and then it comes back into the channel. So if you flip this over, which is just what we did right here, I'm going to take it again. Comes back in, comes back out right here. Okay, I'm going to do it like that so that I could flip it right here, this. And then this is the part where you start to see like the similarities between the sequence. Okay, it's not going to be 1-to-1, but watch this. Okay, right here, from the moment it comes in, so it comes in right here. Look at this. Okay. Comes in. Here's the POI. POI, arc pattern, inverse. So it comes back in. This is where it hits 77. This is the inverse arc. And then what do you have? The same structure. Literally the same structure, dude. Okay. You have a little M pattern here, a little M pattern here. Climbs back up. This is the one that kind of like freaked me out a little bit, because look at this. Right? Same thing. Both of these. And the fact that it's just a mirror of the same zone, 240 days outside the same zone, here is very telling of what we can expect next, right? If things are going to continue to climb back up and we come back into this world, into this little parallel channel, it would make sense based on this. And guys, this is not the first time I've tracked this before. Specifically, this is something I used a lot for this portion of the cycle right over here. I actually have a couple of videos. Go on TikTok, man. Look at the first 5 on TikTok, and it shows the algorithm right here. It for this period, the 240-day cycle, the patterns here were just repeating themselves over and over and over again. From the moment, I believe it was, this was using a 3-month cycle. I'm just gonna like pull something up here so I can show you guys where it was. But from here, okay, it was flipped and mirrored, and you saw, okay, so you saw this portion right here that was inverse, and these were 1-to-1 using the 3-month cycle, because we even had the little arrows pointing up. They were like exactly 3 months apart, and all the patterns here were just overlaid on each other, 1-to-1. I mean, it's the craziest thing. I don't have the analysis here on this specific chart, but it's basically the same thing that's going on, just in a different cycle over here. Okay, so crazy stuff with this, man. Another thing, this is also the part of the piece to this puzzle back here. Remember how we just pulled up the weekly chart? The weekly chart has the spots indicator showing us the same sequence here, where it like gets rejected. There's a blue spot, a pink spot, the curve, and then it does not cross the pink curve line. Same thing happened over here. And the crazy part is, I still have the pattern right here. It's right here. Look at that. This is crazy, guys, because now, look at this. Even this right here is respecting the volatility zone level, the support zone level, and it's just like, it's like a macro version of this. It's just it's a fractal. It's a fractal of this over here. Right here. That's all it is, man. It's just a fractal, bigger version of it, now ready to be projected, basically being projected back up. So, you know, I do tend to get ahead of myself in these videos, and I think it's just because I start finding, you know, all this other stuff, like looking at it over and over again. But, you know, the only way things like these are going to be possible is if AMC holds its current level and starts climbing up here. And, you know, it's been 4 cycles, almost a year. I'm sure a lot of people are just they're tired. They're like, man, like, you know, this thing tracked very well. The volatility zones, the accuracy in the volatility zones, it still blows my mind. The fact that this is even possible. But even though, you know, things have happened this way inside here, it does not mean, I mean, there's more correlation here, that the cycles are inverse, that they are positive. But the special thing, the important thing is that the correlation is 100% inside. Every time we at least track inside the possibility of a move on AMC, and I think that's a very, very special thing. I mean, just think about it this way: like, if you have an entire chart, and with cycle analysis, you know, with this correlation, if you use this correlation against somebody else, the odds between a trader who is and this is just one piece of the puzzle, okay? It's not the only thing. But who has the higher chance of making a good trade? Somebody who's trading the entire chart, or somebody who's only trading inside the points of interest? If you ignore everything else and you're just trading inside the points of interest, with this correlation, if it keeps holding and say that the next one happens inside the POI, I mean, you're always going to have better odds than somebody who's trading outside. This is why I said this was very convenient for me to move. I literally moved inside this little section here because not because of the point of interest. I mean, this is where we had everything lined up and planned to move. And now, you know, we're back here at home, back in business. But I'm telling you, man, trading inside or outside the points of interest for AMC, I think is a dangerous thing. Just with the cycle, tracking with the cycle. But take this information as you will. It's not financial advice. And remember that, you know, nothing here is guaranteed. All we do is track correlation here. This is like a statistics probability type of analysis and, odds are the odds in your favor kind of thing. I use this with the entire market. It's not just AMC. So if you want other plays and other stuff like that, you can always check out the Discord on the link below, and it'll take you straight there. I am going to be setting up a free trial for the Discord for those that are interested. If you want more info, just message me on Twitter, and I'll have that set up for you so you can try it out. Try it out for a little bit and see if you like it. You don't have to pay. But I'll have that set up soon for those that are interested. Alrighty, guys. I'm going to leave it there for today. I've been streaming for a little bit here. And we'll come back next time. You guys take care. Bye-bye.